All right, I am on the road today and traveling, so just got checked into the hotel room and just wanted to bring a quick update after the CPI report today. The futures are down a little bit, but markets finished a little bit mixed today, up on the Dow and flat on S&P and on the NASDAQ, but the futures are down a little bit as investors try to digest what's going on with inflation. It came in pretty much in line. That's why markets weren't too spooked today because it wasn't way out of the range of what was expected. But still, it is showing that the Fed is not done, that inflation is stickier and more stubborn than they thought. So what's transitory now is the decline in inflation, and the disinflationary theme, I think, is what's going to prove to be transitory, and we are looking at a potential double peak inflation. So that's what's on the table. The Fed has more work to do. Some Fed speakers are going to be coming out talking about that, probably continuing to raise 25 basis points as long as it takes to get inflation down. The question's going to be in the long term, are they going to continue to stick with that 2% target, or are they going to try to raise that inflation target to maybe 3 or 4%, which is probably what's going to be likely, because with the labor market like it is, with rising wages like we've seen, and just the cost of everything. I've said it on a couple of videos. I'm not seeing prices come down on anything. I'm seeing prices stay high and continue to go up all across the board, pretty much everywhere. So the real inflation at the consumer level is what the problem is, including housing, including food, shelter, fuel, just everything that people consume day to day to live. And that affects the lower income earners more than anybody else. But here's the Dow right here, kind of still consolidating in this range, trying to get some guidance and direction in terms of what inflation is going to really look like, what the potential for recession is going to really look like. Same thing with NASDAQ, bouncing a little bit, just kind of working its way in this range. The market is kind of holding on by a thin, thread, treading on thin ice right now. One little trigger, and it could definitely drop to the downside. Here's the VIX. Somebody on Twitter had asked the question about the saying on the VIX: when the VIX is low, look out below. When the VIX is high, it's time to buy. VIX is down around that 18, 17, 18 level again. Typically, that's when you see markets reverse. But again, there's a lot, like I said, what's keeping these markets propped up? There's a lot of capital out there on the sidelines, a lot of capital that needs to allocate. That's kind of what's keeping the markets held up and propped up. Here's the Dixie kind of consolidating, putting in a bull flag. So we should expect the Dixie to rise up to this next level of 105 and kind of test that range. The 10-year kind of hanging out, had a little bit of a bounce today, but reversed that, but still kind of consolidating in the range. The 2-year is really up. That's telling you that bond investors are very concerned about the potential for inflation and the inflationary environment. Here's Bitcoin catching a little bit of a bounce after this rollover reversal here. Consolidating in this area, waiting for that next test of that $20,000 range. And once that area gets tested, then we will get an understanding of what the near term for Bitcoin looks like. We've got this 50-200 weekly cross happening, and we did see a decline on that, Bitcoin rejecting on that. But right now, it hasn't completely fallen over to retest the lows that we put in October, November, of 15,700. Most likely, the most likely scenario for Bitcoin is to definitely test that, $19,000 to $20,000 level, 18, 9, 19 or $20,000 level. If that does not hold, then obviously we're going to go back down and test this level here. And a lot of this, whether or not Bitcoin is going to hold or test new lows, is going to depend greatly on what inflation continues to look like and what the recession concerns continue to look like. We've gone from crash landing to hard landing to soft landing to no landing. So it doesn't seem that the Fed has been able to affect demand at all. People have money. The jobs market's tight. Prices are up. Lots of work left to do from the Fed. So all we can do is just sit back and watch it. It's not bull market on, nor do I believe the bottom is necessarily in yet without a retest of the October lows. I think the markets are definitely going to retest those lows. And if that holds, then we can start putting in that that macro consolidation base. Macro, my tongue's kind of twisted. I'm a little tired from driving today, but been on the road all day. But anyways, that macro consolidation of putting in that bottom of consolidation, so then the markets can continue into a bull market phase once we get through this inflation situation and recession, and things kind of balance out, wages catch up a little bit, inflation comes down, which I think is ultimately what's going to happen. Wage inflation is going to have to catch up to price inflation, and the level of inflation, I think, is going to have to remain higher than what the Fed is willing to admit right now. They cannot reverse on what they're saying because they've already been so wrong to this point in everything. They're saying that inflation peaked. Obviously, it has not. And, you know, before they said it was transitory, obviously it wasn't. So these are the things that the market's looking at. This is what I'm looking at, and I'll see you on the next video.